The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Glad to be back here with you. Checking out the markets, looking where they're at right now. We got the S&P is down 8 points. We got the Russell is down 13 with the NASDAQ down 21 points on the day. Markets moving down. Carrie's talking. Markets aren't liking it. And, got all sorts of secrets, and they can't share them, all sorts of evidence, but they can't discuss it publicly. Looking on over at the Dow, we got the Dow down 76 points. We got oil right now down 83 and got to speak right there, 83 cents. But moving on back up, based on what's coming out of Carrie's mouth, just shot up quite a bit right there. We got natural gas currently down about 1% on the day. Corn is down just a few points, with soybeans down 1% move on soybeans right now. We got the euro dollar down 40 pips. We got the Aussie dollar down 32, and the pound dollar down 24 pips on the day. Dollar CAD pretty flat on the day right now, just down 2 pips. Same with dollar franc, up a mere 3 pips compared to yesterday's settlement. Euro yen currently down 66 pips, with pound yen down 44 and US yen down 16. Gold is currently down 13 points on the day after bouncing right off of its one deviation level. Deviation levels serving True doing a good job there, calling the market expansion. And then the contraction from there. So we got gold up at 1,400 right now, 1,400.1. Looking on over at silver. Silver is currently down 2%. That's right, 2% on the day. There's been getting some great wild swings lately on silver. And we got copper down about 1% on the day. Let's go ahead and take a quick look. We'll just see if we see anything to potentially get set up and ready for on gold. Seeing some good market noise pushing it on higher. And just maybe we can find a trade. So I'm going to go ahead and pull that up, and right over here is a trade you might want to check out and test out and learn about for the upcoming contest. We'll talk about that here in a second, but giving away a nice chunk of change that you could potentially take advantage of. We got silver right there. It's sitting at 92.86. Let me bring it on a little bit tighter. We'll put it at 65.95. I put it 0 to 30 minutes, and that's all I got to use. And you can do whatever quantity you want. You can do 1, you can do 10, you can do whatever. And you can do live or demo. But I'm going over and looking at it. That narrows us down to one potential contract at $13.98 on gold. We got quite a bit of implied volatility in there. That's a decent range, gives us like a solid 2 points right now. And we got one that's just 1 point above to go short on it. So we're going to keep our eye on that one. But again, we're looking at the $13.98 right now for gold as the potential trade of the day. And would like to get a little bit more on that one just so we could close it out early, since we're already going in a little bit early. The trade doesn't expire for 20 more minutes. But I'll get the contract open. I pin it right there to my desktop. Makes it really easy to find it. And a couple things that you can do. Let me see if I can find this. I'll show you where this link is. It's a really helpful little program. It's free. And if I can find it, I'll share it with you. And give me 1 second. But it's how to pin things to the top of your desktop. Charts, certain menus, just a variety of different things. But let's see here. Okay, I got like this list of all these little different tools that I like to use. And one of them is for pinning things to the top of the computer. If I can find it, I'll share it. Let's see here. There it is. Okay, I found it. There we go. Yeah, it is called Filebox Extender. Filebox Extender. It's on hyperionics.com, hyperionics.com. But again, it's a really helpful free program, just sort of a nice little trading tip for you for the day there. And allows you to, again, tag windows to the top of your browser. And so that way, when you click on things, things don't fall behind. Just remember when you do it, because otherwise stuff sort of, gets a little bit lost there, and you're trying to figure out where things went. Looks like gold is still moving on up. We might be able to get even a higher strike. We'll see how that goes. Don't forget, we got not only dailies, but we even have weeklies we might be able to play with. But that one's moving quite a bit. That 13.98's already moved up. Now we got the 1401 sitting at $75. So that's a little better potential trade there. And we got, like I said, a lot of activity going on in gold right now, a lot of positive market noise. That is a lot closer. It's not 2 points away. It's only 1 point away. But it does give us the opportunity to hop in and potentially take advantage of that trade. This would be one where you hop in, like, and you buy, say, at 70, and you get out at, say, 85 or 90. So that'd be a little bit more of the strategy on this trade to be able to go in and take advantage of it. And but again, that one's, you're going in there and, grabbing a hold of that contract. As soon as you get in, you get filled on that contract, you're going to want to go in, you're going to want to set a take profit order on it. And you want to be ready also for a stop loss. So if it goes against you, you get out. So again, we got that 1398 one. That one's already up at like $95. If you're in that one, go ahead and, I'd probably hop out of that if you got in, say, around 80, 85 on it. And if gold drops to 1401, you'd hop out of the contract here. We're doing the 1401 gold contract and looking to get out of that one with, like I said, just a small profit. We'll be happy, in, out, done. And but if it goes against us, a nice thing, the really cool thing about it is if you are able to hop in at this little lower price here, is you can go in and get the trade and, like I said, get out of it, pretty cheap. So because you can get out, like, say, $20 lower, then that way you're only risking $20 on the trade versus, say, like 30 or 40, or possibly, if you get out at 50, meaning. But you got to keep an eye on it. Gold is really volatile. Carrie's talking. Things are going on. You never know what's going to happen. So have those take profits, sitting ready to go in order to allow you to, like I said, hop out of a trade should you see, the need to get out. And because a lot of times that happens during commercial break, and I'm not there to tell you. And so I just want to make sure you know how to manage that position. There is a 1404 if you want to go short gold right now. So up at 23.50 right now, you could look at that as well. I usually am not big. Every once in a while I will. I did one last week. But every once in a while I'll do a butterfly on these. I like to be directional when I do these premium collection trades. Okay? And a reminder for you, premium collection just means that you're basically saying it's going to stay, at or above a certain price. If it hits that price, you just hop out. It's not a big deal. It is a big deal if you don't get out. Okay? So make sure you're on that and you hit that button, you bell on the trade. Right the second hit at 1401, you should have been out of the trade. Okay? And, you can be ready for these trades as they pop up. I mean, we got 1398 coming back up. That was our first trade. That one worked out already. It's already went down, came back up. It's even came back down again, giving you another potential trade. I've even seen traders hop in on the same trade twice. So it doesn't mean that you're just out of the trade just because, you're just playing with it. You can hop in there and, you may decide, hey, you know what? I still see an opportunity on that. I still think it's going to go up. And you could do that, but you got to be willing to get out. So keep your risk management really, really, really in check on these trades. Otherwise, it will definitely get a hold of you in a way that you're not going to enjoy. So, okay, let's look at a few things. We got a lot of news coming up, and I want that to be the big focus of the day. Today's a little bit of a wild day to trade. We're going in and looking at, you're trading the day before a holiday, right? So things are going to be a little bit different than, normal. And you want to be, really careful on that whenever you're trading right before a holiday. Things are a little bit more choppy going into the close. People are going to close out their big positions, stuff like that, when they do these trades. And so let's look over here. What do we have coming up next week? Because we got a big week on news that we might be able to take advantage of. So let's look at it and see what's coming up. Now, as you know, we got the manufacturing. We got that. Okay, so let's move on forward. All right, on Sunday, Australia's going to have their building approvals month over month at 9:30. And then let's look over here. We'll see what do we got on Monday. Obviously, we've got the U.S. and Canada closed for Labor Day. Most of the exchanges closing on down. And then we'll have retail sales that evening. Okay? So again, retail sales coming out in the evening over there that you can potentially take advantage of. But it starts getting a lot more interesting as the week moves on. Okay? And what all do we have that we might be able to hop in and, like I said, use? So, well, looking at the calendar, we're going to have the Australian interest rate announcement coming on out at 12:30, okay? At 12:30. So, Aussie interest rate announcement coming out at 12:30 a.m. on Tuesday morning. with the rate statement coming out at the exact same time. Then, if we hop on over, we can look and see what we got on the construction PMI. That's going to come out at 4:30 a.m. on Monday on the pound dollar, so starting the week off strong. Then we'll get into the ISM manufacturing PMI over on the U.S. dollar. That night, we're going to have the GDP come out of Australia at 9:30. All that is just Tuesday, okay? And again, all the traders coming on back, ready to trade after the Labor Day holiday, okay? And then we're going to go on into a Wednesday. On Wednesday, we're going to have the services PMI at 4:30. Again, the services PMI on the British pound there at 4:30. And let's see here, we're going to have the trade balance, USD in Canada. That's not usually that big of a deal at 8:30 on Wednesday. But then we're going to have the Bank of Canada's interest rate and overnight rate statement coming out at 10 a.m. on Wednesday. And let's see here. Then let's see, what else do we got? We're going to have the Aussie trade balance. Again, not a big thing, but will cause a little bit of volatility. You want to be aware of that. And a monetary policy statement coming out on the Japanese yen Wednesday evening. So that'll cause a lot of volatility in the yen. Be ready for that. And then the Bank of Japan will have their press conference sometime on Thursday morning. Let's see. Let's go on down. Thursday. It's just a big week. Okay, Thursday we're going to have the asset purchase facility and the British official bank rate. And keeping an eye still over here on gold. Looks like it's starting to pull back down. Now we're finally in that last 15 minutes, which is expiration premium collections definition is the last 15 minutes. So we're waiting on that last 15 minutes to see if we get a defined trend for a good trade. And it might be actually looking to pull down. So we might be scrapping those upper ones and going with the shorter ones, the 1401 or something like that here in a minute. Anyway, so looking at all these and what we got, let's look on over again. Okay, so on Thursday, we're going to go in, like I said, we have the Japanese rate statement, their press conference. Then we're going to have the British rate statement, and it's going to have its minimum bid rate. Europe's going to have their minimum bid rate come out. Usually the minimum bid rate at 7.45 on Europe doesn't cause a lot of volatility unless it's a surprise change in the interest rate. What does cause the volatility most likely, normally, is the 8:30 announcement. And that's when it's not really an announcement so much as the press conference itself. So that's where we really expect to have the move. We'll also, of course, have U.S. unemployment claims on Thursday. Usually not a big market mover in and of itself. ISM non-manufacturing PMI will also be coming out at 10 a.m. on Thursday. And crude oil inventories will be bumped to Thursday, along with natural gas inventories being on Thursday. Crude oil inventories usually comes out on Wednesday. Will come out on Thursday since we have the holiday on Monday. Let's see here. Also, we got the G20 meetings will be starting up. So random press conferences and announcements coming out of that will cause some volatility. And then we got the big boy moves happening on Friday. We'll talk about that when we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoads, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. It's like that 1401 short's doing pretty well right now. We're right down there. You can buy it back for about $10 right now, so you could have sold it at a pretty good price and bought it back any time now. Right now, like I said, it's quoting right around $8 or $9 on the buyback side to be able to do that trading. Again, that's just saying that gold is going to close at or below 1401. So yeah, we had that shoot up there, and then it started pulling right back down there in those last 15 minutes. And I always focus in on the last 15 minutes. I have played with doing some short-term trades. I'll hop in, I'll get out of them really quick, though. If I can get some low, it sort of sounds funny. It's not really low risk, but lower risk contracts where I can go in and potentially, sell a contract at maybe 60 or buy a contract, say at 60 or 70, and get out if it hits 50. At like 25 minutes till and try to get $15 or $20. So that's one trade that you can try to do. You're usually going to do that somewhere between the 30 and 10 minute mark before. If you're doing that trade, I mean, that's going in, you're like risking say $10 or $15 to make $15, $20. And it's just a very fast, got to have your finger, on the throttle trade. Now, the other possibility, and you should have closed out the 1401 by now if you haven't already. So, I mean, it's quoting right now just a few dollars. So definitely close that one out. Don't let it reverse on you here in the last 5 minutes. You don't want that to happen, okay? So, let's say you're over here, just to give you an example. want to give you an example of both sides of how to do this. Okay, and we'll go down. We'll break down into like 1 minute time frame here. Let's really look at it in detail. Hopefully, you can pick up some tips, some tricks on how to, put all of this together. And so right over here, make sure the screen's coming on through. If you go in, let's say you're trying to get in like 30 minutes before, okay? And the market's heading up. It's like at 1402. And so you go in and you buy the 1401. Now, a few things that you could look at. One is notice this massive volume bar right here at 1312. That's a big warning sign that the market could pull back. Anytime you get those big volume spikes, okay, look at right there. There's another one. Market pulls back. You get another volume spike right there. Market pulls back. So be really careful. This would be more than anything. It's something that I look at a lot is volume spikes for doing reversal trades. But let's just say you did get in on that trade. You bought the 1401. You'd want to be belling on that trade if it came back and it hit 1400, like right there. But the cool thing about this trade is you could probably get in, say like at $60 or $70. You only lose 10 or 20 bucks on the trade. You see it's heading on back down. You're getting a solid downtrend. Now you're in the last 15 minutes leading up to expiration. Okay? So it's heading on down. You can hop in this trade. Now with this trade, you're only going to be able to get in for, say, selling it, for around somewhere between $25 and $15. It comes over here. It's moving down. You hop in. You sell the 1401. You're about a point and a half away. You get a decent amount of change on that trade. Again, you got your stop loss ready to bell. If it did pop back up and hit 1401, you got to be ready to hop out of the trade. Okay? And I know these move fast, so they can be a little hard to follow sometimes. But just make sure you're understanding those basic rules. Looking at it, but use volume. Volume is a great guide. I look at a lot of things at one time. I'm looking at market noise. I'm looking at time and sells. I'm looking at volume. I'm looking at trend on short-term bars like 5-minute bars. Sort of a diagnostic Renko type bar. That looks just at price action versus time to make sure I'm seeing the trend clearly. Make sure the market noise is going in my direction. Make sure the volume's going in my direction. And watching out for those potential reversal spikes that can really nail you if you're not aware that they're there. And I'd say this is probably one of the most helpful things in short-term trading, especially, obviously in long-term trading, but especially trades like this, is when you see a big spike like that, expect a pullback. And sometimes that's when you're all gung-ho and ready to get in, because, it's moving. It's moving fast. It's moving far. You got 2 points in less than a minute. Things just flying up. And that's when you want to hop in. But then you look over and you see that volume spike, and you're like, wait a minute. Usually when they're spiking like that, they're dumping out of their positions. They're adding onto their shorts. They're about to pull this thing back, and it's just the ebb and flow of the market. And so those little volume spikes can be really, really helpful. And you can go back and you can look at charts, and you can just see, like I said, like right here, you got another one, and you can just see this happen over and over again. So right here, right around lunchtime, we got, right around 11 o'clock, we got, got a few volume spikes. And now thing is, sometimes it'll still pop up. Like that one, it went up one more, So what do you do? How do you handle this? What I like to do is I like to see the volume drop the bar afterwards. So notice how we had like volume spike and then low volume. Now at the close of this bar, I have a reversal signal. Right here, same thing. See right there, but I had an up bar, starting to get a down bar. Now you got a potential reversal signal. Right here, volume spike, low close, definitely a reversal signal. And that one happened to be off a deviation line, which made it even stronger. All right, stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. So let's check it out. Let's look at this right now. We got this gold contract pulled on back there. And check out how we got another volume spike right there, right around the pit close. Electronic market still trading. And it spiked on up, and what did it do? It pulled right back from there. So if you'll learn to use this, and I mean, I'm on 1 minute bars. You can use it on 5, 10, 15, just depends upon how long of a time frame you're trading. But I mean, you'll notice, right here, here's another volume spike. And we can go through and we can just look at these all day and see how these really, especially in something like gold that's less liquid, are one of the best indicators for a very short-term reversal. So, look at this right here. I mean, we go in. Even though not near as big as that spike, it's way bigger than the average volume around it. We see, and it's, it's way up there. I mean, the market moved a lot, and we had a spike. And so you sort of want those two things combined, and notice how it turns back around. And then over here, even on this one right here, we get a little bit of a volume spike. And check this out. Right here on this volume spike, spikes right up, and then pulls right back down. So again, very short term, not a long term signal, but just the volume spike alone can let you know, hey, over the next 5 minutes or so, sometimes longer. I know one trader who's been doing this on 30-minute bars and have been having great success with it. He literally goes in. Here's a simple system for you. All right, goes in 30 minutes before expiration, and then looks at volume, he actually, instead of using simply the volume spike, but this would work with the volume spike, he'll just look at really big-tailed bars. And when there's a big-tailed bar, especially with a volume spike on it, and by big-tailed, he means like 1.5 times the average wick, then he'll just go the opposite direction and do an in-the-money binary. So you're not really looking for just a huge move, even though you may get it. A lot of times you do, as you can see. You can get some pretty good moves. But, I mean, you could have been doing this all morning long, just looking for potential trades that are coming up, especially if you can get them close to an expiration. You know, even that much better. But, so like right here, I mean, we look over at this one. Let's see here, 11, 11:30, 11:40, 11:35. That's pretty far out. That's still like a half an hour out from the 12 o'clock, but still would have worked. And you can go over here. We got this one at 13:10. You got a great volume spike right there. Pulls on down. And then you got another volume spike. If there would have been another expiration, it would have been great. Pulls on up. Now, the pit does close, and it is Friday, so gold sort of just chills out now. But anyways, got really, really, just a perfect move. And again, where's it at? It's right at a deviation. Man, you're not going to always get these at deviations. But when you do, that's just all the better. So like right there at a deviation right here, it pulls off of it. This one, literally the volume spike, basically, look at the bar where it opens, okay? It's right into that deviation and back down. We go right over here, this volume spike, right in this deviation and back down. Okay, this volume spike where it ends right here, because I mean we're talking like what, a tick off of the deviation, pulls back down. So, like I said, if you can get them, you're not always going to get them on a deviation, but if you can get them on one, then that gives me that much more confidence. It's just, basically a confluence is the best way to put it. And I mean, but even looking at night, this is also a scalper method, by the way. If you're a scalp trader on the futures market, going down to 1-minute contracts and looking at this and using like, a 1-point stop loss, 2-point take profit, and just going in and just grabbing like, 1 and 2 points off of market over and over again. But like right there, you get it, boom, got a trade. And like I said, you can do this over and over when you got these spikes. There's another spike. What happens? Pulls back right off of the spike. So, and, like I said, you do want to get that lower confirmation, so where it's dropping. And so right there, we got it going down, still pretty heavy. Like, look at the difference. I mean, you're talking like 75% less volume right there, right afterwards. So just a major, major drop in volume before that pullback. Right here, we get a little bit of a drop, and then we get a pretty decent-sized drop. On that one, we do get a pullback. And it only lasts for a few minutes, and really the market just goes choppy for a while after that. But you can go in there, and you're hoping when you get in these trades, you're looking for a pretty quick move. This one, we got about a 25% drop. We didn't really get just a massive drop in volume, so not so much of a volume spike. This is really a European open session explosion on volume. So be aware of that. You will see, obviously, you're always going to see, well, not always, I guess, but most of the time, expect to see a volume spike like right on a market open. That probably isn't the best time to be looking for these. You're looking for more like during, throughout the trading days and stuff like that. But, here, I mean, this one's like at 2,300 hours, volume spike. Massive drop in volume. Market turns around. So over and over again. And like I said, you got the spike right there. And then you got the market drop right there. So same time. And here, you got a little bit of a spike. But you have the 1, 2, and then you do get the drop. That one doesn't work out. That's why you have stops. It's not always going to work. Like anything, it's not always going to work. But the majority of them we've looked at right there, there's a spike, and you do get a pullback for a good 10 to 15 minutes on that trade. So, again, it's a scalping technique, but premium collection is also, in and of itself, a type of scalping technique. Because you're going in for really just a very short period of time and expecting it to not go against you by a scalp, right? Like, maybe like half a point or a point of safety margin built in there to help you out. And, just something that I've learned to watch, especially like markets like gold are very telling. And there you go. There's another massive drop, big volume spike, perfect reversal right off of that. We get a big spike right here, pulls on back down. We have a spike right there, pulls on back up. It sort of calls it again and again, even there. Now, again, it may only be 5 or 10 minutes. We're not talking about hours, days, big trends, okay? You may get them. It may just go to the moon, okay? But we're just going for, short trades. And if you can use this in combination with your premium collection, that's just that much more of an edge. Look right here. We got another volume spike with a massive drop in volume. See, that one didn't drop quite as much. This one we got that's like 30% drop. This is like 75% drop in volume on the next bar. There's where we get our reversal. Right here, we get a massive move down, and then massive drop in volume. What happens? We get a reversal. So, again, if you can start to, just look for that pattern, go back and look at your charts. Look at 1-minute bars for this premium collection thing. This is something you can use as a potential trading strategy when you're trading for the Nadex competition here in the next week that's coming up. And so, again, if you don't know where that's at, hop on over TFNN, click on Virtual Trading Competition, $10,000 in cash prizes. And you hop on here, and the competition is going to run from Monday, September 9th to September 13th. So Monday through Friday. But you have to register by September 5th at 12 o'clock Eastern Time. If you register after that, you don't get in. Once the competition starts, no entries will be allowed, okay? So it's one of those things, don't wait, don't get around to it this weekend. Do it now. Hop on TFNN, click on that, register, and lots of great prizes. I mean, you're talking like first through fifth place daily prizes of $100, plus Tommy O'Brien's book, which is awesome, has a lot of stuff like the volume things I teach. I learned some of this out of his book. And I took him, I applied him to a little shorter time frame, and I learned how to apply him a little bit differently to Nadex, but the same concepts, true market principles, work on all time frames, all markets. And so some great things you can learn just in the books. And then there's going to be a weekly winner contest for the week. And the top prize is $3,000. Second prize is still $1,500 cash. Third prize is $750. Fourth and fifth getting $500. Sixth through 10th getting $250. And 11th through 20th getting a copy of Tommy O'Brien's book. So very, very cool contest. Trade demo. There's no risk. You get to learn. And I know there's going to be some seminars and webinars and things that Tommy's doing and that we're putting together. And this is a perfect time to hop in and take advantage of the scanner, because when you're ready to do these trades, like maybe you want to do that gold reversal trade or whatever, you want to do a premium collection trade, well, you can hop in and go, okay, I want to short somewhere around 14.11 or whatever, and you can just hop in right into the scanner really quick, really easy, and you can pull it up, and you can pick out what trade is going to be best for what you're looking to do. And so, like an example, how would you do that on this right here? We go over here to the scanner. If you're doing a really short-term trade, like a premium collection trade like I teach a bunch, then you can go in here, you can do 65 to 95. Let's say you're going to sell. You can click sell. You know your market. You're going to trade. I'll just throw a random one up right now. I'm not looking at anything, okay? So do not duplicate. But let's say we went over to euro dollar. And we scroll down here, and there we go, 32.92. But there's my contract. So I can do that, or, like, here's what else you're going to be faced with. If you're not doing this, so you're definitely going to have an edge in this contest. If you're doing this, if you're not doing that, you're going to hop on over here in the Nadex platform. You got to remember, by the way, to hit refresh, because if you don't, you won't see the most current contracts. And you got to do that every single hour if you're in the Nadex. Now, ours refreshes live constantly, okay? Then you have to go to Forex, and then you have bull spreads, binaries. Okay, so I'm going to do a binary if I'm doing premium collection. And then I want to do euro dollar. And then I got to look through, okay, here are the different expirations. And which one's the best one? By the way, 3 of these lists expire at the exact same time at 3 o'clock. Again, 3 of these lists expire at 3 o'clock today. So which one's best? Are you going to go through each one of them? You can do the calculations. You're going to find the best binary. Might not be the best way to do things. But let's check this out. I want to show you the power of this. Let's see. Let's just look and see if we can find a good example live right here. And there we go. So, I mean, these are really close. We got a daily, a weekly, and an intraday, all expiring at 3 p.m. Okay? Again, a daily, weekly, and intraday, all expiring at 3 o'clock. And one thing I can see right here is the weekly is 32.25. The intraday is 32.26. We're talking one tick of difference. Okay? Well, why does one pip or tick, why does that matter? Well, on binaries, if it comes down to expiration, settlement, one tick means everything. Literally. I mean, it's everything, because it has to be at or below that strike. So what if it expired at 32.25.5, like half a pip higher? Well, the 32.25 would lose, the 32.26 would win, be profitable on the trade. And so you may not even know, if you're just looking at the weeklies, that you had another option that was a tick higher. Sometimes it's more. Sometimes we found them even at the same price or cheaper. Let's get rid of the filters on here and see what we can see on both sides here. Now what we got is we got 31.90. So you got all these dailies, intraday. See, we combine them all together. See, it's 3 o'clock. So we're combining the dailies, the weeklies, and the intradays all on the same chart and on the same scanner. So instead of you having to click from, intraday to daily to weekly, all of them expiring at 3 o'clock, you get all of them in one place. And that'll let you easily find if there's a good, better, best choice. And maybe we can, I'm trying to see if we can find one that really exhibits it. So sometimes we'll see them like so close, but you'll see a better reward trade like closer or further out. And it's interesting when that happens. Like, here we go. Here we got an example, okay? No, that's not going to work as well as I thought. Hold on. We'll dig a little bit deeper. I'm gonna dig through these. We're going to see if we can find some. But I've actually found these trades where we found strikes that were further out that had a better risk reward, or the same risk reward, And let's see here, 5 and 650. Let's see, 32, 27, 25. So that's a couple ticks difference, about $4 or $5. You have to decide, is that 2 ticks worth $5 less premium for you? Okay. And you can go on down the list and you can find, are any of these close enough that they're really going to make a big difference in your trade. And sometimes, it's amazing how we found them inverted. We found, like I said, like more expensive ones closer and less expensive ones further away, just based on the implied volatility and how it affected that contract on that day. And it's more likely to happen when we have like the dailies and the weeklies coming together. Let's see here. Now, sometimes you won't have it at all. And if you don't, that's fine. But you want to know you have the best contract without having to flip around, and because that time it really can be major money for you. All right, let's look at this. Here's just an example. This is happening all over the place right here on natural gas. Now, this is assuming you're doing a further out than a binary. Maybe you're doing a strangle or something like that. But just looking at this, you're risking $9.50 for the 36.40 strike, but $9 for the 36.50. Well, that makes sense. Less risk further out. But then you're risking $9.50 for the 36.80 strike, and for the 37.20, and then there's $9 for the 37.50. So you're risking more money, literally, on strikes that are a lot further away, just because maybe you don't know that you can get a better priced option by looking at the dailies and the weeklies side by side together. Down here you got some at $91, $90.50, $91 again. Well, it shouldn't get more expensive when it goes further out, but it is on the weeklies. For whatever reason, on the weeklies, they're just charging you an extra 50 cents for the heck of it, And sometimes that's 50 cents, sometimes that's $50. But that 50 cents, even though it doesn't seem like a big deal, it helps you pick a closer trade, which could mean a $90 difference for you in a win or a loss, because you chose a further out trade based on risk reward, and you didn't know that there was a closer trade with the same or better risk reward. So by lining them all up together, it makes it a lot easier for you to be able to, put those pieces together. Now, one of the things we talked about that we're going to come back to, we'll see if we get to it here, for Friday, next Friday coming up, not this Friday, obviously, but next Friday, we got the CPI coming out of Switzerland. We're going to have the pound. It's going to have the manufacturing production PMI, but then we get the big report on Friday. So we're going to talk about sort of my favorite pair for that. And we'll go into more detail next week, of course, but we'll talk about the favorite thing I'm going to be looking at and why when we get back from this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. And so just going through a couple things to make sure you understand that, but also wanted to wrap up the big news report coming up next Friday. Is going to be the NFP, the non-farm employment change, coming out with all the talk about QE and when they're going to scale it back. Like I said, they don't have a press conference in October. That's leading a lot of traders. I'm not saying accurately leading, but it is leading a lot of traders to at least rumor mill it that if that report came in negative, positive, very positive, that they could begin scaling back QE in September. Is that likely? Probably not. But it doesn't matter what should happen. It doesn't matter what's going to happen. It matters what people feel is going to happen. And so if that NFP comes in really positive, what's sort of funny is that could actually be really negative. It'd be positive for the dollar So expect a lot of dollar strength, but it'd actually be somewhat negative for the market because they could see QE being scaled back in September. Again, I don't see it being scaled back in September. I think it'll be much later, but the perception is what matters. Perception is king. And so that's why that NFP is going to have such a big impact on the market. At the same time, we're going to have employment change, unemployment rate coming out. And so I expect a lot of volatility on the dollar CAD. I'm looking for probably a 2-deviation move off of these 8:30 releases because they all come out at the same time. Employment change, unemployment rate, labor productivity, all coming out of Canada. And then we got the NFP and the unemployment rate and the average hourly earnings all coming out of the U.S. at 8:30 on Friday. We'll also have a 10 o'clock IBPMI on Canada, not as big of a deal there. And G20 meetings are happening all day as well. So Australia will also enter into their parliamentary elections. So look for some potential, depending upon how those elections come out, if there's any surprises there, how that could affect potential Aussie monetary policy in the future. So that'll be more of a Sunday, Monday effect as we start getting into, the outcome of their elections there. But should not have a massive impact. I'm not expecting, at least at this point, for that to have a big impact on the Aussie. But again, perception will be key on this. Plus, we're going to have all of these interest rate analysis come out on Europe and Australia and Japan and Britain, all coming out, like I said, next week as well. So with all the traders coming back from Labor Day, with all the interest rate announcements, with this big focus on QE, and when it's going to be scaled back or not scaled back, reality or not, perception being king, and that NFP will have a big impact on traders' perceptions, which, of course, their perception is what influences the market. And then reality, of course, changes their perception rapidly, which can make things flip around twice as fast when something comes out that's not expected. But anyway, so that gives you sort of a wrap-up for what's coming up on the news, and I hope you'll have a great holiday weekend. We got a 3-day weekend coming up here, so enjoy it. Yes, there are things that are open that you can trade, but, learn to relax, okay? And take a few days off. It's healthy and often wise as well, not only for your own sanity, but also just for the fact that if other traders are taking off, you're trading a different game. It's like you might as well change the symbol on your chart, okay? Euro dollar is no longer euro dollar when the U.S. is closed. It's something else because you're losing so many of the major players in the market that it's going to act differently, okay? And you want those same, that's why I like to trade at the same time every day, the same times, because you get to know the group of market participants that always trade at that time of day. It's just like when you go out, I know at certain times of day there's going to be a lot of traffic on the freeway. Other times there's not. And so learning when that traffic's going to be there, it makes it a little easier to determine what way the traffic is flowing, because it can't change so fast when there's so much volume pushing it one direction or the other. All right, everybody, I hope you'll have a great and safe weekend, and I will see you Tuesday. Stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhoads with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhoads, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.